Good morning, everybody, and this is your S&P 500 day trade setups for today. So looking at the 8 hour, it does look like we have got a crossover of all the moving averages now and a rejection, well, two rejections now in a row. But what we have not done is formed a lower low just yet. So my opinion yesterday was really about a retest of structure around 4,300 area for a move back to the upside. Doesn't look like that is going to transpire. I have a feeling we do have a sort of triple bottom here at the moment with inside bar. So this is really a little bit confusing right now because that should be an opportunity to move to the upside. However, we've tested this zone a couple of times. You can see we tested it here, we rejected it here. So the fact that we're here again, if it was the first time we were here, I'd be full of confidence with like this move here that it could be potential. But with this one here, I'm not that convinced. And if you look at the oscillators as well, they're all over the place. So the question is, have we flipped into a bear market? So for me at the moment, just on the 8 hour, we basically need to clear this level here now. I think that's really the last line of defense, which is 42.70 area. Okay, so let's just look at the 3 hour. Nothing really there. There's a pin bar and engulfing bar and things like that, but that's really looking pretty weak. I think the critical aspect here is really that we've got higher lows at the moment, so obviously the bulls are trying to build this. The minute we start breaking below this, I think you're going to have another meltdown like we had yesterday. Well, let's not call it a meltdown, just another 1% fall like we did yesterday. But what's very typical with these kind of setups is you have these pretty violent moves to the upside to test the big levels to the upside, and then rejections that happen. So you can make money either way in a sort of in a bear trend. So your buying areas are pretty much the take profit areas, and they'll always be big levels. And it's always worth taking that taking opportunity there because they typically are pretty big and they move pretty rapidly as well. And the converse is true for the downside as well. But anyway, let's just look at the hour. So yesterday Friday we had the strong move up, and then we had what was looking like a flag. So look at that. So I mean, you can't deny that was looking like a flag off a level, strong move up. You were looking for some kind of a reset, some kind of a pullback, and then we got the break. We got sort of a 1 hour retest. You probably see on the 15 minutes it was a decent retest, and then you were expecting a move to the upside. For me, remember, the 155 is the trend line. That is our trend. So if we're below the 155, we're in a downtrend, we're in a bear trend. If we're above the 155, then we are in a bull trend. It's as simple as that, especially on the hour. So the other higher time frames, it also works out, but you obviously want to use a lower moving average for that. So this for me is just a pure indication. We needed to get above the highs of Friday for that play to play out. It didn't. We got a rejection instead. And we have now formed what is looking like another flag, in my opinion. And basically what we're looking for is a break to the downside. So there isn't a very little structure. There's quite a bit of structure up to the upside here. So that's 43, that's 43.28. That's the area that we'd be ideally looking for rejection off. Alternatively, looking for a break below the lows of yesterday and today so far. For me today, 15-minute charts. That's what you need to be watching. And same thing as on the Dow here. So if you look here, that was the trend line. I'm just going to use this, otherwise I'm going to make this chart so messy. So there's your downtrend. Now we have your flag. We've broken the flag this morning. We've come back to close the gap and coincidentally test level, and at the same time test the flag breakout. So exactly the same setup as what is on the Dow, to be honest. So what we're looking for at the moment is a break below this pin bar. So that is the structure that we see at the moment, but wait for European Open. So basically, you want to put a limit order in below the bar that is basically rejecting. So this is at the moment a weak signal right now. So I'm looking for an inside bar if this plays out, or I'm looking for a pin bar to the other direction, or I'm looking for an engulfing bar. So preferably red engulfing bar, red pin bar, or red inside bar like it's forming now. So once this pattern is finished, if it finishes like that, then obviously you basically move your entry up to there, and then your stop is above it. But just wait for Europe to open first before you go and do that kind of stuff, because it has this habit of ignoring your setup and then shooting up, or dropping and then shooting up and taking the stops, and then it finds itself and moves down. One thing to bear in mind, there is a gap here as well. So don't be too surprised to see that test. And again, the 155 EMA is critical here. You can see on the 15 minutes, it was all over the place. We were inside the moving averages, so there was no reason to be trading that at all. And then we got the break. We didn't get a retest, so there wasn't really a well-structured entry there. Okay, so oscillators also on the 15-minute indicating the same thing. So that's kind of the view that I've got today. If you do take a trade, yeah, you're probably going to have to take profit on 42.83 area on this trend line, because I expect it to bounce maybe even all the way to the top, because it's going to try and form a triangle. The bulls are really going to try and reverse this. They want it to keep going, but I think the bears are probably going to take control. Now, don't get too excited about the moves to the downside, guys, because the Feds will jump in as soon as they feel it's gone too far enough, and they will start manipulating the market. And if you're in bear mode, you're going to get yourself burnt. So see these short positions at the moment as scalps. Just see them as scalps. You want to be in and out, don't want to hold them overnight. You don't want to do anything other than just take the scalp. So take the rejection off a level, look for the next level, take your profit there, move on. Okay, and then obviously when you get to the big levels on the weekly and the monthly, when you start getting down to there, it's well worth taking a buying opportunity. You probably will have to treat them as scalps as well until you start getting higher highs in, but they are going to be just as profitable as it moves to the downside. Okay, anyway, that's it for me today. Please be very, 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 very cautious and keep those stops as tight as possible. Hope it helps, and we'll catch up with you bright and breezy tomorrow morning. Cheers for now.